It's Flashback Friday on Headlines in Fine Print with Dion Williams. Today, we're taking the show back to August 2022 when Dion made monthly appearances on Triad Today for WSJS. In this episode, Dion and Jeffrey Griffin, the host of Triad Today, discuss what happens after a rate change and how such a change affects the credit union.
News Talk Sports for the Triad, WSJS. Good morning, 5 minutes after 9 o'clock. Headlines in fine print with Dion Williams, the president of Piedmont Advantage Credit Union. It's been a while. Welcome back, my friend.
Thanks, Jeffrey. Great to see you.
How are you?
Doing well. Still hot, but fall's on the way.
It is, so just hold on. Cooler weather. So by this weekend, we'll dip into the 50s.
That'll be nice.
So I'm all psyched up about that. So, all right, episode 4 of Headlines in Fine Print. And again, just some of that standard information, the website to visit, pacu.com, P-A-C-U, and of course, headquartered in Winston-Salem. Throughout the credit union network, more than 5,000 branches. That includes more than 35,000 surcharge-free, which is our favorite kind.
That's right.
Of ATMs. Founded in 1949. We've got member owners. We talk about the 6 counties. If you work, worship, attend, play.
Attend school.
Davie,
go to church, work.
Davie, Forsyth, Guilford, Iredell, Mecklenburg, and Rockingham.
That's correct.
You can be a part of PACU as well. So financial services, always changing, right? It's never the same day twice, is it?
That's right. And interest rates have kind of been front and center more recently. Federal Reserve keeps hiking them up, trying to get inflation under control, and that has impacts to businesses and to consumers. So thought we'd spend a little bit of time on that today.
When they make the announcement, when you see it on the news and you hear it on the radio, this is the big news. Interest rates have gone up or down, whichever way it might be. How long does it take for that really to infiltrate and impact the daily business in the credit union?
It's more of a lag because financial institutions in general do not move in lockstep with the Fed when they do that. If the rate goes up 3/4 of a point, that's the rate for a financial institution to borrow from the discount window from the Fed. But as far as how that impacts the loan rates and the deposit rates, that happens more incrementally along the way. But the theme that we're looking at, of course, this calendar year and for the foreseeable future appears to be that we're on that upward trajectory until inflation gets under control, whatever that looks like.
I know, because it felt like it was starting to get wildly out of control on that upward trajectory. You just look at prices and it keeps going. But good news this week, gas prices are down as low as they've been in several months.
Definitely.
So good news is on the horizon, right?
Absolutely. And the employment numbers look good as well. So that's good to see folks are working because we also see, of course, folks have dipped into their savings because of the impact of inflation. Gas prices are still high, relatively speaking. And then going to the grocery store, that seems more expensive too. So it's still there.
So does the current economic environment, does that run on a cycle? I mean, really, do we ever get to a place where you can genuinely and honestly say we've never seen this before, or does it all just kind of go in trends and eventually, if you hold on, it'll come back to what you perceive to be as normal for the financial world?
I would say it's more cyclical, but the cycles are unpredictable. Think about 2000, we had the dot-com tech bubble burst, and then 2008, 2009, we had the real estate bubble, and now we have whatever this is now. I mean, there's just so many things at play. There's a supply chain. I mean, definitely the war with Russia and Ukraine has impacted some of that. COVID has impacted some of that, supply chain backups, but it's different stuff, but cyclically, things happen.
Right. So how do you try to keep when your member owners, when they come in and maybe they're getting nervous, and how do you keep a little bit of perspective? Because we're coming out of the pandemic. What we hope is in the post-pandemic era, and all of a sudden we find the world. It feels like every day maybe on the verge of armed conflict, and is that going to impact? And we hear about. I feel like every time we go to the store, we hear about the supply chain. So when somebody comes in and says, all right, Dion, I'm uncertain, I'm a little bit nervous, I'm uncomfortable, what do you say in that conversation to reassure we're in this together, we're in it for the long haul?
Well, I just kind of take a step back to a topic we talked about in the previous show, which was the emergency fund. So that's one thing, just having some reserves for rainy days. But the other one of my favorite books is called A Random Walk Down Wall Street. And for anyone that likes the cryptocurrency or whatever the bubble of the day in the stock market is. I'm much more of a buy and hold person myself, that do things for the long haul, understand that things are going to happen. It's not always going to be an upward trajectory of good news and high returns. So always plan for the worst, hope for the best. But remember, slow and steady wins the race. So save money, sock money away for rainy days, sock money away for retirement and college education, and all of those things. And if you do that along the way, when there are blips and that roller coaster dips downward, it's going to be okay. It is just a blip or a speed bump, and it's not catastrophic.
Right. There are peaks and valleys.
That's right.
In every journey, and you just have to kind of hold on. And because, and really the credit union, and you have a long-term perspective, but you also, this is people doing their daily living. These are my daily expenses. I got to go get groceries this week. I've got a house payment this month. So many times the interaction is more immediate. This is what I'm looking at in the next 30 days.
That's right. And I would just say that with gas prices in the grocery store, those are definitely things that we see it. I got gas this morning. I saw it. And so those are the things that impacts what your paycheck is, but still keep up the habits that you're doing. Put money in your 401k, put money in your savings account, and just keep doing those things that you've done along the way. And that makes this a lot more palatable when we have those bumps that we're in right now.
I've never met anybody or known anybody who saved money and later said, I wish I hadn't done that.
That's exactly right. I've heard a lot of people said, I wish I had done this in the past, but if you do it as you go, it's there. And I think all of us would, me for sure, and I'm sure a lot of other folks, I wish I'd started this when I was in college or shortly after college. Some of the habits you learn later in life just through living.
Yeah, you get young people, and you can even start elementary, middle school, and certainly when kids go out on their own, and that maybe it's the first time away from home for college and all that, you want to have some responsible financial habits and discipline in place so that then when they hit 50, they look back and go, wow, that was a really good decision. Thanks, Dad. Thanks, Mom.
That's right. And I think for schools that it would be great to have that as part of the curriculum, high school and college. And then when you come out into the quote unquote real world, that you're more equipped, because when you're in college, you have credit card offers flying at you all the time. And a lot of opportunities to go into debt, and that's not even getting into the student loan conversation.
Right.
So you just want to understand that when you're in college and saving money and working for that, you can also open up a Roth IRA. You can do things to save for your future. So when you come out of school, you're ready for that car purchase or that house purchase or whatever it is, that you're learning to do it with cash instead of credit.
And Piedmont Advantage Credit Union always welcomes. You're riding down the road and you see one, pull over, take your kid inside, because you don't want them to get to be 12 or 13 and be scared of, that's the place where they deal with money. And that's intimidating. Now go in there and have that conversation. These are real people dealing with real life, just like the rest of us. And it's a great way to introduce your kids to, this is how you can be responsible and learn about it.
Yes, and we have a kids program, and we've designed some products and services specifically for youth, and education is a huge component of that, because we want to have folks go off to college feeling very comfortable with their money. They have that debit card or maybe that first credit card, but more importantly, they understand to respect it and the wise use of it.
You want to be with them. Again, we're not going to be with you 4 years. We want to be with you for 40 years, for the lifetime, right?
Right. We can be there for your very first credit or checking experience, but we have the products and services for the cars, for the student loans, for the mortgage loans, and even the wealth management service on the back end as you get closer to retirement. We really are a financial institution for all stages of your financial life, and we're honored to be in that position for you.
And if you've got questions, folks, you can learn more at pacu.com, P-A-C-U. Now, if you type in /join, you can learn about the difference between banks and credit unions. Dion, I've had that conversation a little bit before. And we've also talked about the importance of securing the data. And
That's
sometimes
right.
It's out of your hands, but there's work underway to try to ensure that everybody's being responsible with your financial information.
Yes, in the industry, there are strict data standards for financial institutions. Piedmont Advantage, I can tell you specifically that we have all kinds of tests and things that we do to ensure what we're doing internally is safe and secure. And as an industry, we are collectively lobbying for merchants and retailers to be held to the same standard, because, again, when something happens, we're going to do what it takes to make you right, but we want to make sure industry-wide, wherever you shop or anything like that, that the best care is being taken care of your information so you are protected.
And also, and you've heard Dion already mention it, the importance of creating and maintaining an emergency fund so you can withstand the storms that come in life. Now, today we're going to focus on the current economic situation. Some good, maybe some not so good, but we'll address it all. Dion's got all that information, headlines in fine print, with the president of Piedmont Advantage Credit Union, Dion Williams. The Federal Reserve has aggressively increased rates to combat inflation. So does that present any challenges for a credit union?
It does, and I'll kind of take a step back into how credit unions function. So as a cooperative, basically the deposits of one member are loaned out to another member,
okay,
and that's how the credit union works, is folks pooling their money together for the benefit of everybody. And liquidity has probably been the biggest challenge during the pandemic because the stimulus payments came in.
Right.
Literally, Piedmont Advantage grew $100 million in a very short period of time because the money came in, but consumer habits were not what they were. Folks were working from home,
right,
not really dining out as much, all those things. So we grew more than we had places to put the money, so to speak, because the money that we don't lend out to other members, we have to invest just like you, just in other folks. You know, we try to find certificates or bonds or places to put the money and do so in a safe and responsible manner. And then, of course, the interest rates, as you know, during the pandemic were next to nothing. They were basically zero.
Right.
So that was definitely a challenge for the credit union, was liquidity. But now the pendulum has swung the other direction, because now that interest rates are starting to go up, gas prices are up, food prices are up. We've seen folks shopping that money around a little bit more,
right,
looking for other rates, and some of them are just having to withdraw some of that stimulus money because it's gotten more expensive to live.
Daily living, it costs what it costs.
So you look for an equilibrium, that you'd like to see a balance between the deposits and the loans, but we've definitely been living on the extremes, more or less, that we had excess liquidity, and now that's tightened up considerably with the changes in the interest rate and the market around us.
And it swung quickly.
Yes, it did.
We went from, okay, I'm kind of padding the old emergency fund, and now you're looking at the monthly bills, and okay, this is what we got to pay. You know, you talk about gas prices. It's one of those things you can worry about it if you want to, but I still got to get up and go to work.
That's right. It's
and
transportation.
Here in a couple of weeks, we still got to get kids to school.
Right.
And going to church and all that. So it is one of those things you have to kind of deal with that whole notion of it costs what it costs and still be responsible with what you have. Now,
yes,
you talk about for consumers and members, what does that mean when it comes to deposits and loans? Are people moving money just out of need? Are they moving funds from account to account out of necessity? And really, what's the best way for folks to talk about moving their money?
Over the last 2 years, it's interesting because the dynamic has really switched as well for consumers. The members that were more deposit-oriented, it was a rough couple of years for them because interest rates were so low. And so now the rates are coming up, and they are looking to move money around for a higher yield on those deposits. So certificates of deposits are starting to yield more, money markets,
right,
so the whole spectrum. So those folks are seeing brighter days because, of course, rightfully so, they want to see a high return on their money, but rates were so low across the board that there was not good yields to be found hardly anywhere during that time. On loans, on the other hand, if you were a borrower the last couple of years, good time.
Right.
Mortgage rates under 3%.
Sure, refinancing was wide open business, right?
Absolutely. But now the cost of borrowing has gone up, so you're going to see a slowdown there. But there's another issue at play here. Sure, you saw it in the news that with housing, the prices were going up, and the supply of houses relative to the demand of houses, that was not in equilibrium.
Sure.
So even though rates are going up, there's still a supply-demand issue being worked out because there was so much excess demand for housing and renting and all of that. And cars, too. I can't remember if I shared this on a previous show, but I have had a vehicle on order for 2 years.
Oh my goodness.
I'm not going to name the vehicle because I don't want to. It's nothing against the car dealership or anything like
Right.
that. We've had a vehicle on order for 2 years that has not been manufactured yet, and that some of that has to do with chips, and some of that has to do with parts they need and things of that nature. And this isn't like a. I mean, this is transportation. This isn't a crazy car or anything like that. This is. So those are things that we're dealing with, that even though rates are going up on cars and rates are going up on houses, there's still a supply-demand issue that hasn't fully come into balance.
It's not
yet.
been resolved. I
Right.
mean, there's still things at play. One of our friends was in a pretty serious car accident this year, and the insurance company initially just going to pay for the repair. The repair the estimate was 9 to 12 months to get the parts. So the insurance company, at no request made, their counter offer was, when we tell them it's going to be 9 to 12 months to get the repairs made, they just totaled the car. And here is the settlement. You're better off to go get a new car that you can find on the lot, because they're the same situation you're talking about.
And with that example, and with the cars and the houses, until that comes into balance, that is also another factor of inflation, because it's supply and demand, and it's pushing the prices upward. And compound that with gasoline, and compound that with groceries and housing and cars, and we still have a very challenging environment for consumers.
So there is just a conversation so that you can maximize your return with the rates and the way they fluctuate up and down. Where should you be putting and where should you be taking?
That's right.
To make the most out of the money that you have. Now, the credit union can help with all of these strategies. You don't have to navigate that by yourself. And a few episodes ago, you talked about how a credit union is a financial cooperative or a co-op. Now, what does that mean?
A cooperative, and you may have heard the term also in terms of agriculture or utilities, that really it's folks coming together for the good of the cooperative. We're all pulling our money together, whether that's for agriculture goods or electric goods, or or in our case, financial goods. But it's a big group of people that have something in common, coming together to pull their money together for the benefit of everyone. And in this case, as I mentioned a little earlier in the show, that it's we're taking the deposits from some members and loaning it out to other members, and then the money that's left, we'll invest that as we can in safe investments to earn a return, so we can continue to give members a really good rate on their deposits, a really good rate on their loans, keep their fee structure low, and just create a really good financial experience for the member.
And there is, I think of the scene in It's a Wonderful Life with Jimmy Stewart standing there, and he's going, the money is in Bob's house, and then the money is in June's house. We're all in this together. So that gives you some unusual power and authority to be able to make wise decisions that benefits the group when those options may not be available to a singleton.
That's right. And when a member asks a question, and sometimes there's hard questions when a member's having a tough time financially, or if we can't honor a request that's made. But the way that we always explain it is that this money belongs to other members. So we have to be wise and careful stewards of that money, that we're investing it carefully, because it's on behalf of the entire membership. If a loan is not repaid as promised, that is a loss to our
The members bear the brunt of that.
That's
default,
correct.
Right?
It's 35,000 members that we have, and if there's a default, then that impacts the return to the entire membership. It's not mine. It's not another employee's. It's not the board of directors. It is the 35,000 members of the credit union. It's their money that we've invested.
Thank you for listening to Headlines in Fine Print, featuring Piedmont Advantage Credit Union's president and CEO, Dion Williams. If you feel this episode was insightful, feel free to pay it forward by sharing this podcast with someone you think might benefit from the latest episode. You can also connect with Piedmont Advantage Credit Union beyond the show by following us on our socials. Search Piedmont Advantage Credit Union on Facebook or Piedmont Advantage CU on Instagram. Don't forget to rate and review wherever you listen to our show. Each rating and review helps us reach a wider audience with our breakdown of the latest financial services headlines in fine print. We hope you enjoyed our show.